Good morning, everyone. It is Thursday, January 16th here, and we have some news out of the world of short selling. So, everyone's most hated bear, or everyone's favorite bear, depending on how you look at it, one of the most famous short sellers in Wall Street, or at Wall Street, is calling it quits. Hindenburg Research, right? Hindenburg Research is vastly famous for a lot of short calls, and attributed the decision to a career that has come at the cost of missing a lot of the rest of the world and the people that I care about. So that's one of the reasons as to why we're seeing Hindenburg call it quits. But there are also other reasons on the underlying factor of it. And it has been increasingly difficult to be a short seller in the current market environment. Obviously, there are outliers that Hindenburg did very, very well on in identifying. And I saw some of the statistics. It was about like 81% of the calls that Hindenburg had were right? At break even or right. So, like, there weren't too many that were break even, but the majority of them were right, and there were a few naturally that did end up rallying drastically. So a very good track record for a short seller, which is a very difficult positioning to be on, to be a constant short seller and looking for those imbalances in general. So there are other short sellers that are left, right? You have Jim Chanos and Citron Capital, who have also hung their boots or have been targeted by regulatory probes and lawsuits in recent years, along with Bill Ackman. So Hindenburg has been behind some of the most notable calls during the last 7 years in the business, and the firm's reports have covered companies from Nikola and Icon Enterprises to Super Microcomputer, also Roblox, which have seen the departure of executives and fines, and even bankruptcies at Lordstown Motors. Also Smile Direct Club, remember that one. So Hindenburg also didn't limit its research to the U.S., going after global targets like India's powerful Adani Group in 2023. The art of short selling research seeks to identify market manipulation, also unethical practices and accounting fraud. And boy, did we have an impact, said the founder Nate Anderson, that wrote in their letter. Nearly 100 individuals have been charged civilly or criminally by regulators, at least in part through our work, including billionaires and oligarchs. Many companies that have that are targeted see huge drops in their stocks, though others dismiss that and see their share prices recover, like the campaign against Carvana earlier this month. Some of Anderson's beginnings in short selling came from actually seeking alpha, where he would post under the pseudonym of Hindenburg. It was a reference to the 1937 disaster and similar man-made disasters floating around the market. Anderson now plans to release material and videos on how to conduct investigations, which can cater to the next generation of analysts who want to learn the craft and embrace the same passion. So it's very disturbing to see a short seller being pressured out of the business by government as they bring a necessary and useful element to accountability to the markets, writes Julie. Really hope to see some other firms step up and play the role that Hindenburg did. So we've seen a lot of, not a lot, but like many research reports that have hit social media and the news recently based on Hindenburg's research that have had cataclysmic pushes to the downside. And short selling is a very, very tough craft, especially in a market that's been ripping super aggressively. It doesn't mean that there aren't opportunities out there, specifically in stocks, like I said, mainly targeting unethical practices and also accounting errors and fraud, things like that. So while the other equity markets right currently are just ripping, the overall market continues on a press higher. Tech is up. We also have upside in the general equities, as we saw that the CPI continuation movement has been bountiful. But I think at this point, you know how it goes, right? You get this like massive aggressive pop, what seems like on lower volume, since we've had this like expansion here on a very, very thin, unfinished auction of volume. Retail starts getting long at the tops because they see, oh wow, we've gapped higher yet again, and what happens from that is a decent pull to the downside. CPI, NASDAQ ends up 2%, right? So it seems like at this point we're on a very fragile upside move. That could have a decent little turning point, which I would welcome to go and clean an auction before we start moving continuously to the upside. I think that this upside was fantastic, right? It was something to look forward to, but I think at this point we've got to clean some things up before we continue that press higher. People are looking for shorts on oil. They're looking for potential failures on equities, as a lot of the trading community is looking at this as a potential lower high. So I'm not one to say that, hey, this has to be a lower high right now. I think that the potential for a sweep of the current lows is still there. And if indeed that we did print this low here, if this is indeed the low at the 5,800 area on the S&P, I would like to at least clean the auction here on this CPI data on the overnight before we continue that upside for a higher low. The problem that I have with the January 12th, January 13th low in and around that 5,800 is that it's a very, very poor low. That doesn't mean that we can't continue up from there, but it would make a lot more sense if we head fake at least under it, clean it up, and get a really strong low. But if that is indeed the low, then we're going to see some buy pressure into the 5,900, 5,920 area on the S&P on pullbacks to continue this spring up to push us towards that 6,100 area. So today I do lean bullish the way that this thing is opening up above key auctions. But if S&P loses 5,990 today, honestly, I don't think that the upside is going to be that bountiful. I think that they want to clean up some of the movement to the downside. Yesterday, in terms of the order flow data that came out, as we were continuing the rally, it was a sequencing of continuous absorption from the sellers as prices rallied higher, with some just like buyers eating things up. So for me, it wasn't super convincing. Or is it? Into yesterday afternoon session. Like, look at this. So as we rallied up, like, just shorts kept getting absorbed, some buyers here and there, but just like a plethora of shorts continued to get absorbed on the whole way up until we eventually toppled over into the close. The way I see this is that if these sellers really take a hold of these equities today, right, meaning that we start breaking under 59.90, under 59.80 on the SPOOs, you're going to see a pretty quick clean to the downside. So it's something to be cautious about. I'm not saying, oh, short every single rally, but right now we're desperately trying to hold 59.90, as you can see here pre-market. And if these guys do end up toppling over, like, which I think might be the case, you got to be very careful with the buy side today. So let's take a look at how this thing shapes up. Let's open up our room. We'll be streaming live actually today, power hour at like 2 p.m. Eastern time. I'll jump on stream. We'll see if there is any trade opportunities. We'll review some of the trades and see if we can get some kind of information and opportunities at power hour today at 2 p.m. Eastern time. So I'll see you guys for that. And ideally, the stream actually holds up, unlike my weekend stream that I tried to do. So we'll keep at it. So thank you guys. Let's open up our live trading room. I'll see you guys in there, and have a great